Can you please provide an understanding on the pricing mechanism for Bitcoin? For example, how much does a $1 million inflow, outflow move the price? And is the multiple you use variable or fixed? And why? Is there a calculation for total inflows at a total given price? Yes, there is. So let's just jump in and show you some of my models. I have a thing called the 21x multiplier. I was able to calculate it after Tesla bought Bitcoin. They spent $1.5 billion in Bitcoin. I could determine exactly the impact on Bitcoin price based on that influx of $1.5 billion. So that's where I get this. Now, if you imagine, and this is a slide from 2022, I'm from early days of talking about BlackRock, but if they put in $50 billion, we got 10 trillion assets under management, half of 1% is 50 billion times 21. That would impact the price of Bitcoin by 75 grand, take it to 102,000. Again, slide is a year old, but let's take it to today and have a look at what it looks like. Using the same multiplier, 0.5%, $50 billion, spend, etc., multiplier, that would take the price, potential future price of Bitcoin, if half of 1% of the assets under management for BlackRock went into Bitcoin, it would take us up to about $82,000, which is 172% from here. Not bad. Let's throw in a new wildcard, which came out this week from, and I covered this briefly yesterday, is from the FundStrat team, Tom Lee and co. What they did was they looked at the current Bitcoin market and how they believe it is in balance. That means there's $25 million worth of Bitcoin in daily block rewards, and there's about 25 million in daily demand. That means 25 million is being created, 25 million is being absorbed, so the price remains flat, and that's where we are right now. But there's more. So if we look at how this works, if there's incremental ETF demand, one of the team on FundStrat, Sean Farrell, believes that 25 billion of demand, of course, is possible for the forthcoming future. And if Bitcoin come in, that will drive $100 million in daily demand. A 100 million on top of the 125 million. So the equilibrium price, if the daily demand for Bitcoin increases to 125 million, that's 25 plus 100, and the daily supply is only 25 million, the implied equilibrium price would need to rise so that the daily supply matches daily demand. And equilibrium analysis suggests that the clearing price is 180,000 before the 2024 halving. Again, if BlackRock comes in and if BlackRock brings about an increased incremental demand of $100 million of buying a day for Bitcoin. Okay, let's take this and bring it back to my model of 21x multiplier and see how it compares. But what we're going to do is we're going to do it for all the top asset managers in the world. Fidelity, Charles Schwab, Citadel, Deutsche Bank, BlackRock, and Nomura. These 6 run about 27 million in assets under management. And what does that work out to in the model? Real simple. So if they all, that 27 trillion, if they plump in half of 1%, which I do believe they will do over time, they have to, and that's a lot less than what they typically do for gold, that'll be about $135 billion times the 21 multiplier is 2.8 trillion. And the impact on the price of Bitcoin is 202,000. And that'll take the price of Bitcoin up to 229,500 or a 665% increase from where it is today. Make any sense? So again, that assumes those top 6 asset managers allocate half of 1% to Bitcoin. That's where the price of Bitcoin will go. If I was to use the numbers from FundStrat and Tom Lee, it would be a lot higher. Mine is more conservative.